Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, January the 28th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I go a little bit further and I talk about option strategies that I'm implementing into my portfolio based on those assumptions I come up with. But for you all out there, I have streamlined the process in order to find that right strategy for any given assumption. We aren't just looking at pulling an option strategy out of the hat. Who does that? Nobody goes into the day and say, I need to put on an iron condor, and where can I find the best place to put on an iron condor? No, what we do is we look through the charts, we look at the economic data, we look at the fundamental analysis. All of those things come together to impact our decisions. Now we need to look at that underlying around that decision we made on a directional assumption and find out what the volatility is, the pricing of the options, and all of those things in order to find the optimal option strategy for that assumption. And I go to the point of giving you the right strike locations or the optimal strike locations for any given trade where the probabilities are turning in your favor. All right, so without further ado, let's get on with the economic data because I got a lot to talk about today. I'm trying to speed up the talking process. Just kidding. All right, so here in the United States, nothing really across the pond, but in the United States, we got advanced GDP coming in at 4%, expected to be 4.2%. Unemployment claims coming in at 847,000, expected to be 880,000, lower than the expected is better. That means less people are claiming unemployment. They did revise last month's number up by about 14,000, though. Keep that in mind. So kind of tarnishing that headline number, just albeit a slight bit. Wholesale inventories, preliminary wholesale inventories coming in better than expected at 0.1%, expected to be 0.5%. That would lead me to believe that inventories are getting moved, not just because of the lack of producing, but these guys are moving inventory because of some demand going on here. So that is obviously a good thing for businesses. Advanced GDP price index coming in at 2%, expected to be 2.2%. Now, they would say that that is worse than expected. That is bad for the economy because that's showing lack of demand for goods and services. But I like to see those prices come off a little bit to allow velocity of money. CB leading indicator, leading economic indicator coming in at 0.3% in line with expectations. New home sales just fell flat on their face at 842,000, expected to be 860,000. They also revised last month's number down, meaning new homes are not moving. What are we seeing? The reason for that? We saw interest rates rising during this time, right? We also have seen elevated home prices during this time. It is historical home prices at this time. That is crimping people from buying. That's stopping them from buying these new homes, folks. And that is what we're seeing there. Maybe you start to get a little bit of bond movement to the upside, lower interest rates. That can help this home market at this point in time. I don't see anything else that really is going to. All right, natural gas storage is a drawdown bigger than or less than expected at 128 billion cubic feet, expected to be 140 billion cubic feet. All right, so let's get on with the overall markets, and I'm going to blow through these really quickly. Still continuing to see some weakness today in crude oil, despite the fact that we saw that massive drawdown yesterday. I was expecting a little bit more upside here in crude oil, not getting that today. Gold futures slightly in positive territory. I think that these guys are kind of losing some of the limelight from what's going on over in the equities. Bonds off by almost a point today. Interest rates rising. That means if bonds go down, interest rates are going up. That's not going to help the home prices, it's not going to help home prices either. That's going to actually, if interest rates start going up, home prices should start coming down. All right. That's usually what we will see there. All right, let's get on with the equities. VIX coming off. Why? Because that whole rotation seems to be done. Dow Jones Industrial Average up 600 points on the day. Market making some massive moves as what's happened over at this whole Wall Street bets, the Reddit trade that's going on in all of these markets that are associated to Melvin Capital. Basically, these Wall Street bets, Robinhood traders or the Reddit guys are all trying to put the short squeeze on this. We've been talking about this for days. And what has happened? Well, we were seeing those people have to sell stock in order to generate margin for these short positions that they were basically massively underwater on. That is what we believe we were seeing there. Now, today what happens is Robinhood comes out and says we are not allowing any new purchases of stocks like AMC, GameStop, and a few of the other ones. Why are they doing that? Well, Robinhood doesn't make their money on transactions. And when we've seen over there in, let's just get through this real quick and I'll start talking about it a little bit more. All the markets up nice and big today, almost retracing all of their moves as we can see. And basically, that's due to some of that Robinhood trade. I'm just going to jump to this Robinhood trade really quick, talk about that before I talk about the trades that I've done. All right, so we see this spike last night up to 483. That was an overnight high. They tried to make a move to the upside. I think we got about as high during the day session as around 400. But there is no new buyers allowed on at least the Robinhood app, folks. And what's happened is we did try to make that move to the upside as some new buyers came in, probably people from other trading. But what happens, Robinhood makes their money off of selling their order flow to the Citadels, Susquehannas, and things of that nature. And what they do is they scalp that market, all right? So they're taking advantage of arbitrage. If they see a better price on Robinhood, they'll sell that they'll sell that stock and try and buy it on a different platform, different exchange for a better price. So they're scalping the market. That's how Robinhood makes money, is because they sell that order flow to those people, those folks, and those folks can make the money off the scalping if they can. Now, my theory here is in GameStop is that those people were saying, not only are they eating the shorts lunch, they're eating our algos lunch, and they cannot keep up with it. We're losing money. We're not going to make markets in that, blah, blah, blah. All these people can do is come out there and sell out of their long positions. That's the only way to trade GameStop on basically like Robinhood. Now, we can see that the market really fell out of bed. They're screaming on Twitter to hold the line. All these Wall Street bets, Robinhood, and the Reddit people are trying to get everybody to hold on to their longs. Now, people can't get in there. Portnoy, Barstool, everybody is losing their, all their, I mean, I think Portnoy said he was down $1 million. Very quite possibly true. And is claiming that he should be able to participate in free market price discovery, which is true. But Robinhood is beholden to somebody else, folks. It's not you they're beholden to. They're not making their money. That's why it's free. It's free for you to trade on Robinhood. Why? Because they're selling your order flow. That's how they make money. And those people that are buying the order flow are making fistfuls of money. Okay? So it isn't a hard lift to figure out in my eyes. So with that being said, with this market coming off, I was hoping to get a little bit of volatility contraction to get out of some of my short puts. I don't love that trade. I only put it on because I couldn't sell calls against it, which was probably a good thing for me. But having said that, the market volatility is not allowing me to get out of these puts, which I would happily get out at this point in time for a scratch, because the downside in this underlying is really pretty scary, and people should be very aware of what could happen there. So I am still looking for an opportunity to sell calls in GameStop. I think it's ridiculous, but I am going to be patient and find the right opportunity to do this, because volatility obviously isn't coming out. All right. Well, with that being said, that's my big soapbox on Robinhood. Everybody is complaining about Robinhood, and I understand why. I've been saying it for probably 4 years now that they're basically trying to steal their customers' money, and all of these people went in there and thought, oh my God, it's free. Well, this is why it's not free, folks. It's not free because they aren't beholden to you. All right, I'm done. I'm done with that. I'm moving on. Let's get our sleeves rolled up here and get on with the real markets, the rest of the markets, because this soap opera is sure to play out even further. I can assure you of that. All right. Let's talk about the trades that I've done. Facebook. All right. So I tweeted this out yesterday, folks, in Facebook, went into this trade. You know, the whole thing with my theory on this whole trade with getting short in Facebook, short calls in Facebook, was the fact that they were losing a lot of money with Trump out of office. Really, they're seeing a lot of people kind of leave. There's not, you know, if they were basically, you know, pushing anger, and that was really driving people to the platform. And now that there's not a whole lot of anger there, or at least people aren't participating the same way, I felt that they would probably lose money like Twitter as well on advertising, and that seemed to be the case where they are not looking as good as they once thought they would be for the rest of their lives. But anyway, having said that, I went into the Jan Weekly, sold the 300 calls in there for $1.91. Now remember, for every one contract you do, there's an option contract multiplier of 100. So I collected $191 for every one lot that I did. Now, I was able to get out this morning for 34 cents. I was trying to work a little bit better bid, but ended up holding the line at chasing it a little bit, but holding the line there at 34 cents. Got it when we started getting this pullback. All right, and then Microsoft was another one that I did, I don't know why I can't get my tenths correct, but basically Microsoft, I told you my theory on Microsoft. I didn't do Microsoft. I did I did Facebook and McDonald's. Sorry, Microsoft we already talked about. I already did the trade, talked about Microsoft. I thought McDonald's would do very well in this type of environment. People are still wanting to go out. I always see a line there, so I wanted to play this up to the upside. Plus, they came back with that McRib sandwich, I think, for a while. Anyway, same Jan weeklies that expire tomorrow. Sold the 200 puts in there for 80 cents. Bought them back for 16 cents this morning. So 2 winners on that. We're talking about GameStop. If you have any questions, comments, or anything else you would like to talk about, hit me up down in the comments section. If you're on Robinhood and wondering why this is trading, I can go into a little bit more deeper analysis on all of that stuff, why I wouldn't use Robinhood, or all those reasons. But having said, especially now that things like TD Ameritrade aren't charging commissions, they aren't selling your order flow. All right. So that being said, if you have any questions, comments, or anything else, throw it down there. I will go back and forth with you. Also follow us at protraderstrategies.com on YouTube so you can get all our content. And, you know, give me a thumbs up if you like this. Share it with your friends. That's all I got for you. Other than we do need to take a moment to understand our risk disclaimer, as there is opportunity to lose money as well as make money. So please know your risk by checking out that disclaimer. All right. So if you can't take that, take it easy.